Good morning and afternoon, everyone. My name is Susan Copeland from the IIAC, and I'd like to welcome you to this webinar, Artificial Intelligence in the Financial Industry, Practical Uses and Issues. This webinar, featuring industry experts, is brought to IIAC members as part of the IIAC FinTech Committee's efforts to bring our members relevant and practical information about how they can use FinTech in their operations to enhance and serve clients, enhance their business and serve clients. In addition to broadcasting live, this webinar will be available on our website in the next few days. We're pleased to welcome Scott MacKenzie, President of Fidelity Clearing Canada, and the chair of our FinTech Committee, who will moderate a discussion with Matthew Goddard, the Managing Director and Head of Canadian ETFs and Futures Sales and Trading at BMO Capital Markets, as well as Sami Ahmed, the Chief Digital and Data Analytics Officer at BMO Wealth Management. Scott, Matthew, and Sami will discuss ways in which firms can use this new technology to increase efficiencies and improve the client experience. Before I hand it over to Scott, I want to advise you of a couple of admin issues. If you wish to ask a question, please use the Q&A function at the bottom of your screen. The panelists will either answer during the discussion or at the end, depending on how it relates to the presentation. Also, if you're having any technical issues, please also use the Q&A function. Our tech person will be monitoring it and will communicate with you that way. So now I'll pass it over to Scott and our panelists.
Thank you very much, Susan, so much for that introduction. I also want to thank Ian Russell and the entire IIAC for putting together this event and helping us with the technical setup of this webinar. I also do want to thank the IIAC FinTech Committee. As Susan said, it's a committee I chair along with Jack Mastriomati that focuses on financial technology opportunities and capabilities for dealer members of IIAC. And finally, and most importantly, I want to thank Matthew and Sami for being with us today to share their perspectives and their experiences firsthand on this exciting new technology and innovations that we're seeing in artificial intelligence and robotic process automation. So without further ado, I do want to kick off the session with just some background on AI. For those of us on the panel or on the discussion today, obviously there's a lot of interest in this topic. And if you weren't convinced by your own personal interest, the numbers tell the story. Last year in the United States alone, there was over $18.5 billion in venture funding that went into AI. And that was a double of the $9 billion that was invested in this space in 2018. Most financial services firms are already looking at AI, and certainly AI is permeating our daily lives through Netflix, Uber, Amazon, and probably most of the digital technologies we're using in our personal lives. So it's a great topic. I'm really excited about hearing how the folks at Bank of Montreal and different business units use this capability. And with that, I think I'll start off with just a pretty basic question. To help the folks on the phone maybe understand a little bit about artificial intelligence and robotic process automation, Sami and Matthew, why don't you tell us a little bit about your roles at the Bank of Montreal and how you were first introduced to these technologies? I'll start with you, Matthew. Off mute.
Yes, there we go. Firstly, thank you all for having me. It really is an honor and privilege, and proud to represent Bank of Montreal and BMO Capital Markets here today. So when I think about my experience in the industry, AI has become a very pervasive topic, and there's so many different areas within every different bank, technology company that are focused on it. For me, my journey to it was really one of zigs and zags. And what I like about it was never really my intention to get involved with artificial intelligence. It really just happened by a function of always looking at business problems, and more importantly, thinking about solutions. And throughout my career, as I've spent time trying to find solutions, the compass kept pointing closer and closer towards AI. In fact, if I step back in the beginning, I wouldn't have even have called it AI. To me, it would have just been technology, automation. And as the need to do more and more of it it really became more important, that's really what it was that we were doing. And so I'll step back to my early career. So I've been in capital markets for 15 years. I started my career at another Canadian dealer as an options volatility trader. I was co-running that book for 3 years, and this was between 2006 to call it 2009. And during that time, it was obviously the financial crisis. So it was a pretty amazing time to be in the market. And I also was paying a lot of attention to what was going on the electronic algorithmic side of the business. And it was becoming very evident that in times of stress, volatility, and with so many products that were now coming online, you had to have a real serious technology strategy if you wanted to succeed. And it was something that really inspired me. And eventually I left to go and start my own HFT company, which is a high frequency trading company that was situated in my hometown, Barbados, where I'm from. I'm sure you're picking up on some kind of an accent. And we set up an ETF arbitrage business that was HFT driven. And that was my first real foray into the deep end of technology, where you're building your own systems and you're thinking about network latency, co-location, and tiny fractions of at that point milliseconds was fast, and that's what we were thinking about. 2 years later, I came to the Bank of Montreal, where we were already a very established ETF market maker. We were at that point 10 years in the business, and we had a pretty good standing in the space, and we were one of the first that were there. And my predecessor, Kevin Fong, had done a phenomenal job building up that business. But at that point, there were then about 100 ETFs. And remember, it started off as one. And so when you think about the technology life cycle, and interestingly, Kevin Fong had studied computer science, and he was building some of the first algos in Canada for market making. Even the systems that we had then weren't really passing muster, because now all of a sudden there were 100 ETFs, and different types of problems were now becoming very evident. Now, a lot of the work we had done in my previous company was highly applicable, and we effectively started to rebuild all of that technology from scratch the second time. And that was extremely timely, because that was the edge that we needed to grow that business, because we never could have foreseen just how much the ETF landscape was going to increase in the next couple of years. And so although we were proud and thought we'd built something for scale, and to be frank, that system is still outside running approximately, about 3 months ago or 4 months ago, it was running almost 800 ETFs, that system that we started building in 2010. But now it's actually running far, far less. And that's because in 2015, we started to see cracks in the armor. And at 500 ETFs, we could see that we're starting to hit limitations. We didn't expect that much growth. And so then we had to set a really, really big target. And that was how AI gets involved here. Because one of our goals was we wanted to build a system from scratch that had amazing performance, could handle massive volume, and we set a huge goal. The goal was we wanted to be able to run 5,000 ETFs on our next platform. And we're only at 500 at that time, but the big goal was without having to hire any new traders. And that was where the goal got ambitious. Said, well, how do you do that? And it was, again, going through all the technologies available at the time. And it became very obvious then that we had to think about automation on top of the automation. So we had to redo everything we had done before, new hardware, software, bigger, faster, better. But you can't actually manage 5,000 strategies with 3 people, for example. And that's when we had to think about that layer on top. And that was when the deep dive into AI really started, and machine learning specifically. And after we had learned all we could, built some models, saw some value, went and hired a data scientist who really was an expert in the field. And all the ideas we're building on, we were able to take the next level. We saw that value. And it became very evident that we had to build a team like this that could not do only this for one business, but for all businesses, because it was really just values and principles that we were applying to a business that was unlocking its value. There was nothing, in my opinion, particularly special about the ETF business that made it the only one ripe for this technology. And so then we formed the data cognition team, which I head up, and that consists of data engineers, data scientists, DevOps, cloud experts. And that truly is an expert team that is centralized and will partner with all businesses across capital markets and deliver full end-to-end machine learning solutions.
Matthew, thank you. Zigging and zagging from what sounds like a business problem and maybe a sort of non-technical person to begin with into, leveraging these technologies, building scale, and now running kind of core services. Sami, how about your background? I mean, you're coming at this from a different perspective, right? The wealth business, and give us your kind of introduction to AI and sort of your role at Bank of Montreal and how you take advantage of these capabilities.
Absolutely, Scott, and a little bit less of a zigzag route, a little bit more linear in nature. But really, when and just by way of baselining on definition, really the way myself and the team kind of think about AI are really these are machines that are mimicking human intelligence and behavior, systems such as natural language, computer vision, even robotic process automation, virtual agents. They all kind of fall into this kind of broader category of AI. And they have the ability to kind of make those inferences about what they see and hear and achieve kind of that human-like understanding. So it's less about kind of this elusive AI. It's about, as Matt mentioned, kind of good, reliable, enabling technology to help us solve problems faster and automate a lot of manual, mundane work that humans do, really to kind of create that high order kind of capacity. So, on that note, really, I started my career after University of Toronto, where I studied computer science at Accenture. So in consulting, where I was with Accenture for about 16 or so years, kind of worked across all the banks, insurance companies, telcos and such. And really the focus was a lot of good hardcore kind of technology delivery projects, which then evolved into enterprise and data architecture, then using statistics and modeling to solve some of these business problems in a more automated way. We didn't even call it AI back then, so kind of very organically as those algorithms, which didn't really evolve, but the computing power evolved to a point where we could start to leverage the computing power for the same algorithms that existed even decades prior, from Jeff Hinton and many of the other AI luminaries. We were now able to apply more predictive machine learning and modeling techniques to solve problems with our clients. And then as AI's kind of fanfare grew, a big part of my role was kind of working with organizations to set up kind of an AI strategy and help them kind of start transforming towards that strategy and starting to achieve those milestones. And that's kind of when I took a role at BMO. So I became kind of the head of data and AI transformation across different lines of businesses and corporate functions within the bank, really focused on leading our AI strategy for the different groups. So working with Matt and the capital markets team, working with our friends at Wealth, at retail banking, risk and fraud, et cetera. And a big part of that success was just understanding how they could use it independently within their specific groups. And if they're already using it, how to kind of double down and accelerate. And then what sort of bets and investments the bank needs to make around technology investments, around upskilling, around talent acquisition, et cetera. So there's been quite a bit of progress up until now. To give you a couple examples, some of the things that we're doing more broadly within our FCU, also known as our Financial Crimes Unit, we're uniquely kind of maintaining trust and protecting against this ever-increasing threat landscape that's emerged with what we call advanced threat intelligence. So we're proactively assessing and responding to a myriad of risks across anomaly detection, through network traffic scanning, to using computer vision and CCTV footage, closed circuit television footage in the branches near the ATMs to kind of pinpoint fraudsters from a physical security perspective. We're also optimizing how we allocate employees within certain branches and corporate offices during a crisis. That crisis could be a riot, it could be an upcoming weather pattern, such as hurricanes approaching in Florida, and to be able to predict those in advance for the safety and security of our employees and clients. Another cool example is around what we're doing in personal financial management. So more on kind of the retail side, focused on checking, savings, and credit card accounts to start. Making sure that we have the ability to kind of automatically transfer funds to a savings account when there's sufficient money in the checking account to cover expenses and shortfalls in an automated manner. We built a cash flow prediction model to predict potential negative cash flows for certain clients 14 days in advance, to really avoid some of those customers from seeking out what they call predatory loan options, money market type options. And being able to support them with different types of products and services to, kind of help maintain continuity and kind of keep them at the bank and uphold our customer experience. So there's quite a bit happening in this area, I would say, over the last couple of years. Matt hit on some examples, and we can talk about a few more.
Good, thank you, Sami. And I really appreciate you coming from a purist technology perspective and the range of solutions that you just kind of highlighted. And Matthew, again, coming from a business problem perspective and really taking advantage of the technology. So I think there's a lot we can explore over the next half hour or so. I just want to remind everybody too, if you have a question, please put it into the Q&A. If it's relevant to a topic we're talking about in the moment, I'll try to introduce it. And certainly we've got lots of time we've left at the end for questions from the audience. I know there's about 60 or 70 people already dialed into the webinar. So we hopefully get some feedback from you guys throughout the presentation. So now, Sami, I'm going to stick with you just for a second. And maybe when we think about use cases, between both you and Matthew, without giving up the bank's secret sauce, because I'm sure they wouldn't like you to do that. I'd love to hear about maybe one or two examples of a specific implementation, and maybe talk to us about the approach to the implementation, talk to us about maybe governance, maintenance of these types of solutions, the types of things that go into not just the, saying we're going to do AI, but actually making it work for practical outcomes in the business. And maybe pick one or two examples, Sami, and then I'll come back to you, Matthew, with the same question.
Yeah, I'd be happy to. So a good example would be in the area of product pricing. So again, a retail bank example. So we've come to a point over the last couple of years developing this capability where we can now offer personalized deal management that facilitates client interactions with a first of its kind, machine learning based, relationship based pricing model, and optimizing that price based on value versus price sensitive customers. We started off in the mortgages and home equity loans set of products. This really allows our frontline staff to kind of interact seamlessly with this information at their fingertips. It allows an improvement in the customer experience. It cuts down on the time it takes to sign up for new products. And now we're kind of expanding that product or that kind of capability set across multiple products within relationship pricing in the retail bank, and also looking at business banking in other areas as well. It's helped from obviously a revenue perspective, but more so kind of customer experience perspective over the last year and so within the bank. Another example is around, I mentioned robotic process automation earlier. So BMO has well over 200 quote unquote bots in production. Across front office, middle office, and back office. It's not just about kind of automating the back office manual functionality. There's really good examples of it being implemented within business banking in the front office. So we're using RPA to automate the onboarding of the new business bank application process, which has allowed our staff to focus on spending more time with customers, less time kind of pushing paper and signatures. And it's been generating kind of greater sales, as well as turned around the time from what could be a week to a matter of a few hours to kind of set up a new account. There's a huge kind of customer experience uplift there as well. And then something new that we're doing, it's relatively newer in the area of wealth management, which is where I sit, is looking at the intersection of AI and behavioral science. So we're digging into kind of these cognitive biases that customers and prospects might have in the context of online stock and equity trading. So behaviors such as anchoring bias and confirmation bias, the halo effect, the bandwagon effect, a lot of which we're seeing as a result of kind of the market's kind of very drastic fluctuations a la COVID. And we're going to start to analyze the cognitive biases to be able to kind of nudge clients towards certain learning opportunities around specific industries and portfolio areas that they're looking into, introducing an offer to test out new kind of power tools around doing more sophisticated market analysis, as well as opportunity to speak to an actual person, a human or an advisor regarding their portfolio mix and upcoming goals. So this is where kind of this AI kind of recommendation engine, combined with cognitive science can be quite powerful. And in all these examples, a big kind of a mantra that we have is kind of build once and reuse many. So whenever there's something that's built in, say, well, the retail can benefit from, or within enterprise and capital markets or other groups can benefit from, we try and kind of catalog and make those available. It's not perfect yet, just to make sure that we have kind of faster time to market with a lot of the AI powered business capabilities.
Perfect, thank you, Sami. And that last comment, time to market, Matthew, when you described a bit of your journey, both as a HFT kind of business owner in the sunny Barbados, and now back to cold Canada during the winter to work within the banks. But you described a scale problem, 500 to 5,000, and you described it as something that was aspirational over multiple years.
Mm-hmm.
When you talk about the implementation of the AI solutions that your business unit is doing, talk to us a little bit about the time to implement. Is it instantaneous or is it multiple years? Talk about the learning throughout the implementation and kind of modifying the capabilities, and maybe a little bit about governance, like what happens if the robots go crazy.
Yeah, that's a great question. I think I like to always break things down into very small, simple problems. And when you're dealing with complex systems, what I like to think about when I think about how to improve them is a complex system is nothing more than a huge amount of small, simple systems that are really just seamlessly integrated together. And so my advice always for anyone is start with a very, very basic problem. Actually, in general, when you're thinking about machine learning, I think it was Jeff Hinton who would have said that, or I'm not sure who said it, but think about any problem that takes 2 to 3 seconds of thought, but you do very, very often. Those, when you're thinking about things to start automating right away, that is the low-hanging fruit, because it's going to be easy to build relatively, and the efficiency from scale and compute doing it is going to be huge. So to take a step back and forward, when we've been working on technology and AI for years, and it builds on itself. And so it's like the exponential benefit you get from any technology, where, as Bill Gates says, you overestimate what technology will do in 2 and underestimate what it'll do in 10. And to some degree, I feel like that's been a part of the 10-year journey I've experienced here, where for many years, you don't necessarily see that progress because it takes a long time. And to give you one example specifically that we've applied it to, that I think has differentiated the ETF business, has been in the area of hedging our risk. And traditionally, a huge amount of the ETFs in Canada now have gone international based. And this is normal in any part of the world where we have ETFs that you can buy, and they're going to give you exposure to companies in Europe, Asia, places outside of our time zone. And that proposes a challenge, because in a traditional ETF, you can buy it, hedge it perfectly with its underlyings, and you have no risk, subscribe, redeem, and you're finished, you're off the races. Now we have a challenge where we have to provide liquidity on a growing number of ETFs where the underlying market that we hedge and price on is closed. And what that does is it creates a correlation challenge where we do need to hedge. We're not just going to sit and buy and sell millions of these shares and do nothing. We need to find similar assets that we can hedge that can minimize that exposure, minimize our risk, and more importantly, the smaller that tracking error of these 2 lines effectively allow me to price that ETF tighter. And if I can price it tighter, the issuer is happier, the end client's happier, and we have a product that can grow successfully. And so what I'm talking about traditionally is a regression type of problem. Before, what you would have done is you would have taken a subset of securities that you thought were representative, maybe in North America, for example, that have an overlapping time zone, and you would start to find out what baskets perform similarly to the actual underlying holdings. Now, this is a problem that can that can take a while to do, because if you're an expert in it, even then you would be using regression tools, you'd be doing a lot of statistical testing, and there's a whole bunch of criteria that you would think about. So historically it was done, and it was done still, traditional methods, Bloomberg, Excel, stats tools. But this is really ripe for machine learning, because one of the most basic machine learning tools is a regression. And that's what a lot of people fail to realize, that a simple linear regression is probably the most extensively used machine learning tool available, except what happened is the models have advanced significantly past what a basic linear regression can do. But the actual process of training a regression is no different than training a neural network or any of the, there's so many different types of models that you can use. And that's being able to have unbiased data, being able to train that data to find a model that fits. Then having a validation set where you're going back and forth to test it on data. It's kind of seen because you're testing it, you're tweaking it, you're changing your parameters to get that model you think is best. And then you have that unseen data that you then test it on as the final test to say, okay, does this model really have statistical validity? So that process stays the same. But you need to really understand what you're doing to build a robust framework that can do this thousands of times a day, that can run this on a huge number of securities with thousands of underlyings. And it's a really interesting computer engineering and stats problem that really is the example of doing something that can totally be done by hand on a one-off basis, but you can't build a business on that. Because right now there are about 800 ETFs that we're managing, and there's new products coming online all the time. And also the hedges change. And when you have an efficient pipeline, you can then retrain them every single day. And the crisis that hit is a perfect example where the regime changes. And so models that you thought that were good might no longer be as good. And if you have a really bulletproof pipeline in place, you can quickly retrain, optimize your models, and have far more confidence managing your risk. And the beautiful thing is once you've really tried and tested and true, then the process of it rerunning itself is all fully automated, meaning that work to build it was front loaded, it was time consuming, it was challenging. But once it's done, then you can scale this thing almost indefinitely. And to really drive home how this is just one example of many where different aspects of the business, there's hundreds of moving parts in an ETF business, but those same principles, as I said, in 2010, when I joined, we had 2 traders running 100 ETFs. Right now we have 3 running 800. And clearly we had to hire somebody, but it shows you the power of technology, because none of that would have been possible if we weren't thinking about technology the right way. And these are the types of tools that help you get there. As far as your question on governments, we work very closely with model validation teams. Sami would have a lot of familiarity with the similar groups. There's anything that would have previously regulated any form of algorithmic trading, technology, model validation, governments, we are subject, anything in AI is just an extension of technology. But in fact, you have more different bodies that we're now thinking about when it comes to regulation. And Sami can probably speak to Trustworthy AI. And there are a whole bunch of things that we're thinking about how to implement and already starting to do. And these are the things we have to think about a little differently, because it is somewhat of a new technology, or I think of it more as a technology that's just advancing a little faster than the tools we have previously used.
Thanks, Matthew. And interesting the way you started the comment just about solving a small problem. And again, I think Sami's examples as well were practical real life things that most of us can relate to. We had an interesting question. I'd like to ask you both this because I think your experience is really relevant, although your bias within a large institute might kind of challenge us a little bit here. Many of IIAC member firms are small independent broker-dealers, boutique wealth managers, and this idea of AI can feel overwhelming. So if you think about maybe, and I'll ask both of you the question as well, starting with you, Matthew, if you had to give a small boutique manager or a small business owner to say, how do you start the AI journey? Is there third-party technologies? Is there experience? Is there ways that you can accelerate into AI without the foundational data set and processing power that maybe a bank would have, or the data management? And I think you lived this when you started your own business, but maybe give us some practical advice for small members that are like, how do I start my AI journey, and where is the best place to go for sort of resources and support around that? And Sami, again, I'm going to ask you the same question because I think your perspective would be interesting as well.
Yeah, it's a great question. And it's funny, when I got to that journey of figuring out, okay, it's data science and it's an AI team and all that, it really took a while to figure out how do we get there, and is this the right approach? And what I think makes a lot of sense is going back to what I said in the beginning, where you break complex tasks down into very, very simple things. Like anything, you start with the easiest thing you can think of. And I think oftentimes why it becomes overwhelming is, let's stop forgetting about what you hear Google's doing in these places, and just look at what you're doing on a day-to-day basis and figure out if there's anything I am doing, any part of my job that I can automate, then that is going to be of value. And what I should say is I shouldn't have said that, because the biggest problem is we tend to worry about how do I automate a job. And that's actually the biggest misconception. Because a job is nothing more than a series of tasks, and every person might have a job. But if you can break your day down into a number of tasks to get that job done, and you assign a time value ratio to any of those tasks, it would become very, very clear, if you had the discipline to do this, that there are a number of those tasks that aren't really value added, and they're not that important to you getting that job done. And when you start there and think about what would I need to do to automate each one of these tasks, and believe me, it sounds very simple, but once you start to automate 3, 4, 5, and then you connect that automation together, you step back and say, wow, what are we building here? And it really is, the expression I love to quote is, go as far as you can see, because when you get there, you'll be able to see further. And for every person, you have to discover that journey for yourself. And the only way to start is on the things that you have right in front of you that you can address, and just go there, and you will be surprised at where you end up.
Great. Thank you, Sami. So go as far as you can see, start small, start with problems in repetitive situations. Again, for a practitioner, a small firm, one of the people listening today on the call, what would be your best advice for them to kind of start the AI RPA journey?
Absolutely. I think Matt kind of covered off really well, kind of the systems thinking kind of approach to kind of dissecting some of these problems. And then when you kind of take the next step into, okay, how do I address that problem? I think getting started, if I were kind of in your role, would very much explore a lot of the commodity AI, quote unquote, AI related services that are available out there. Yes, there are third-party tools and other system integrators that you can work with, but when you look at AWS, you look at Google, you look at Azure, many of the common algorithms and services around computer vision, natural language, text to speech, virtual agents, a lot of that is available, and it's available at a low cost. So start small with the kind of proof of concept for one of those kind of problems. Have someone on your team or hire someone kind of scrappy, got a bit of a data science engineering kind of blend would be ideal. Leverage some of those services, without even doing much customization to kind of solve that problem and see what the results look like. And then as you become more sophisticated and you iterate on that problem, that's when you can start to introduce more proprietary elements into the algorithm, into the process, into the broader system that you're creating. And it's very scalable, right? And it's available in the cloud at a pretty inconsequential cost, especially if you're starting small. But that's how I would approach it on the hiring front, and then from tapping into some of that technology that already exists. So there's a lot of learning available and a lot of free learning that's also available for some of the existing team members that you should explore, both from each one of those cloud vendors that I mentioned, plus Coursera and several others, just to kind of start ramping up in parallel to kind of testing out some of these needs.
Super.
And I just want to jump in there because I wanted to echo with that comment where I think it's absolutely critical, regardless of how big or small the organization is, you want to have, at least if you're small organizations, at least just one person. I think one person gets you started that understands the technical side of the business, has some type of a data science background, that can understand these technologies, because even though they may be able to build a small scale system, you need someone who can navigate the roadmap and understand just the lexicon, the vernacular of all the different technology groups you're going to talk to. If you're, as Sami said, if you're going to talk to Amazon and Google and Microsoft and all these different platforms, it's mind-boggling. And you may have a very good business idea, and also but you may have no concept of really what are we talking about here. And more importantly, having a sense of, am I being charged the right amount of money to then do these? And if you were to just partner straight up, I think as a business person, and go to outsource everything, I would say be very wary of the costs, and because there is a whole bunch of language in this area that can be very, very confusing. And if when you go behind the curtain, it's really not that bad, but you want to have somebody that you can trust and rely on to help you navigate that if you can't do that yourself.
Great advice. You mentioned regression, neural networks, random forest, some of these concepts that have come up. I'm a little at a loss. A lot of Googling happening on while I'm listening to what you guys are saying, but that's a great point. Another question that came up, and I think it's just sort of, you sort of referred back to Sami with regards to governance. The question we got, which I think is a really good one, and even related to this data scientist versus business practitioner, getting stakeholder approval, getting buy-in, getting the business or the business overseers, compliance, risk management folks comfortable. What's the process that you guys have experienced in terms of both moving an initiative forward, but ensuring that your partners, your, again, compliance, regulatory risk, other stakeholders are on board and coming along? Can you talk about that process? Sami?
Absolutely. So yeah, I'd be happy to. So what we've done, I would say sometime middle of last year, so we recognize that, AI, at least at our bank, it's becoming more prolific. People are using it. Many use cases are going into production. Many more groups that were previously not playing in this area or starting to experiment. So we need to ensure that there's some guardrails in place, right? So as we continue to expand and deepen the application of AI across the bank, there's these new risks that are surfacing around fairness, around bias, around privacy, around ethics. It's an emerging area of research, and what we call it is kind of trustworthy AI. It's kind of a catch-all domain, which is being implemented in many of the other large FIs in some shape or form. So we said, okay, we as a bank, we want to be committed that whatever AI we build and launch, it's fair, it's accountable, it's transparent, it's trusted. So we established this council. We call it Trustworthy AI Council. It's company-wide. It cuts across all the different groups. It has representatives from our enterprise risk group, from capital markets. It has our chief ethics officer, as well as our chief privacy officer. It has, one of our senior legal counsel representatives, as well as the head of technology and head of innovation there. And the mandate is really to establish these kind of very practical guardrails, not to get into kind of the weeds of like 50, 60, 70-page risk directives. If someone wants to do that, it's their data, that's totally fine. But we want to get very practical about not slowing down innovation through all these kind of additional controls, but really to speed it up with the creation of these kind of self-service tools that provide you with guidance. Hey, if you're building this type of AI model, and you're sampling this type of data, be aware of these types of potential risks. Here's a toolkit that you can integrate with during the development process or the sciencing process to kind of flag some of those for you, as well as provide remediation techniques that you can use to make sure your data set is more fair, your algorithm is more explainable and transparent, as well as in parallel introducing a learning curriculum. So as part of a broader, we call it BMO4, but a large kind of broader learning agenda that we have, introducing kind of a work stream on this specific topic in terms of what are the basics around making sure AI is fair and accountable, who to go to for additional resources, what sort of playbooks and tools that people have access to. And in creating this kind of overarching framework and council with a set of leaders that are accountable for it, we've been able to kind of keep people honest and focusing on the right ways to govern AI without them slowing things down. So that's the lever that we've been pulling.
Great. Matthew, has this governance, have these councils ever impeded your ability to move forward with initiatives, or are they good partners to you and your business in making sure you get the right outcomes with the right kind of stakeholder buy-in?
Yeah, I'll start by saying, regardless of the process of getting there, it's incredibly important, especially within a big organization, that you have everything signed off on, everybody comfortable, everyone on the same page. With that being said, as soon as you have layers in between the business and getting something to production, it's always going to be some level of friction, but it's very healthy, necessary, required friction. And I think so far we've had tremendous partnerships with all aspects of the life cycle. And it's sometimes it's learning on both sides, and ultimately we're just trying to get something to production in a way that everybody is comfortable with. And it's required. It's absolutely required, and it's important. And every part of the bank that has any type of process or automation or technology has similar standards that they have to consider.
I love that. One of my clients in the business always likes to say, without grit, there's no pearl. Without friction, there's no traction. And sometimes it doesn't feel nice, but you generally get better results when you have, when you're challenged, if it's not just smooth sailing. I want to take about maybe sort of leave about 5 or 10 minutes towards the end for some questions from the audience. We've had a couple of great ones so far, so thank you, but please use the Q&A button if you've got other questions. I do want to ask a bit of a future-looking question for both of you, and again, I'll start with you, Matthew. Just a couple of minutes. What do you think the future of AI is? Where is AI, RPA going? Particularly in our industry, because I think that's what people are really interested about, but you guys are deeply immersed in this, and there's things that you see on the horizon that are really going to change or transform how we use these solutions.
Yeah, sure. This is a fun one, and I'll take a bit of a tangent, because when I think about finance is pretty much, it's further behind in terms of our adoption of technology. So whenever I'm looking for inspiration for what I want to do, I'm really focused on what's Amazon doing and what's Google doing and SpaceX and whatever. And then you're thinking, okay, maybe that's somewhere we might one day be in a couple of years. It kind of gives you this crystal ball. And okay, as a lot of the tools and algorithms that they're using are going to be highly applicable, if not already, to the things that we are doing. when I look at AI generally and say, okay, well, what are the really cool things that are happening? Everyone knows about self-driving cars, and that's happening, and that'll happen. It's just a matter of when. Things that are pretty exciting are going on with brain interfaces. That is taking neural networks and that type of technology and those models to the next level. And it's the same thing with pattern recognition, where you can think of your brain as a bunch of electrical signals, and that's your inputs A. It's a lot of noise, there's tons of them. And they can apply models to them to start to infer quite literally thought. Okay, so now what they're focusing on is thought to words, thought to text. And with some accuracy, that's already happening. And what becomes pretty cool, or scary, depending on your view, is at some point then what happens when you can take that text and put that back to thought? You know, because you have to make that leap and say, I'm going from high data rate to low data rate, but can I at some point do that? And these are areas that are being thought of. And if you can assume like all these things, it will happen, it's just a matter of when, then wirelessly through the network, you'll quite literally be able to do telepathy. And you're just conveying ideas in a very, very efficient way. And then you have literally things like a universal language, and who knows if that even requires words and speech. And it could be a scary thing to think about, or a very exciting one, depending on your perspective. But it's something you really have to think about philosophically to have an opinion, I think, on it. It's a really interesting one. And the other one I think is a real game changer, though. This one has true medical applications right away. Actually, the other one does too, but for different types of things, like Alzheimer's, et cetera. You can use the same technology to stimulate parts of the brain to help that. But vision is one of those areas. I remember Jeff Hinton actually came and he was doing a presentation here at BMO. And I had the opportunity to speak to him on the site after, and it was interesting. He told me, I said, like, what excites you? You know, that his opinion really matters. And he said vision. And I totally agree on that. And one of the things I had read was that there was a group that had been spending some time on this. And what they have apparently been able to do a couple of years ago now is map a certain number of neurons in the visual cortex, effectively behind your eye, and be able to take images. And via connecting them, people are able to start making out edges and shapes and contours. And the reason that is really cool is because what they were saying, at least implying, that if they could map like 1,000 more, some number like that, people might be able to start making out words and text. And like with everything, push a model to the extreme. Effectively, what we're saying is at some point we may be able to completely bypass the eye as an input for visual. And when you have 8K, 20K, God knows how many K of resolution, you might be able to see things far better. You can instantly you won't even effectively need your eyes. It's an interesting one. And when I like to think about these philosophical perspectives, it's like you could quite literally then tap into somebody's point of view instantly. And that is a really powerful thing.
Wow.
But we do have to be very careful about hacking and those things, of course. But that goes with anything. But
yes.
These are sort of the extreme levels of where this stuff goes, and it will change the way in which the world does everything that it does.
Yeah. Yeah. So for somebody in my generation, it's like that science fiction to reality and what some of the things you describe. Sami, how about you? What's the future of AI, RPA? Where do you see it taking us as an industry or as a society based on what you're seeing now?
Yeah, what excites me are definitely kind of the types of use cases that Matt kind of spoke to, and there's so many of them that every other day, even when you're on LinkedIn, you see another post of some genius kind of invention. It could start small. It could even be a student in another country that's come up with something using commodity hardware and Raspberry Pis and cloud-based services. So for me, it's about scale and adoption, and the excitement on how accessible AI is becoming to solve problems. And you don't necessarily need it helps, but doesn't necessarily need a very kind of senior PhD or designation per se to get access to it and start kind of cracking problems. I think, thinking about how AI is going to go deep and how it's going to go broad, I think it will continue to go deeper in the area of, from machine learning to more kind of deep learning, kind of layers of machine learning algorithms that's being adopted today. And quite frankly, even a lot of the deep learning algorithms are starting to become available and more accessible cloud-based providers to kind of fast track implementations within your existing companies. The benefits it has on digital adoption, I think Satya Nadella, CEO of Microsoft, was quoted just a few weeks ago as a result of COVID, how we've done 2 years of digital transformation as an industry within a matter of 2 months because we were forced to, right? COVID in one sense, and working remotely with our clients and employees kind of forced our hand to be able to kind of double down on these types of technologies and start to apply them really quickly. And then when I think about going broad, I see there's huge dividends around kind of exponential growth when you start to combine AI beyond kind of point algorithms and models to introducing AI with AR and VR, task-specific hardware, IoT, cloud, distributed ledger technology, enhanced privacy techniques like differential privacy, 5G, telecom and whatnot. When you start to combine, coalesce these technologies, that's when you start to unlock kind of new sources of kind of competitive advantage, which can help us expand new revenue pools, reduce costs, create more in the moment personalized customer experiences. And I think we're going to see a lot more of that. I do a little bit of work with the World Economic Forum, like the next boy that they're thinking about is like AI plus all these different technologies and how we can start to combine them into creating more sophisticated systems that are a lot more immersive.
Sorry about that. I was just fumbling with my non-AI driven mute button. That's great. I really appreciate the kind of future looking perspective. There is a couple of practical questions that popped up and we do have a few minutes. So I would ask you guys rapid fire style. What's the number one opportunity for AI in wealth management in 2020? Matthew, I know you're more on the capital markets side, but you're also a human being. You've got to save and build for retirement and everything else. Number one opportunity you think in wealth management for artificial intelligence in 2020?
I think it's still opportunity in the recommendation part of the business, really understanding your client. The more data that we have and interactions we have with our clients, the better we can utilize that. And assuming you do that, you can really start to hit the next level of bespoke, customized, tailored solutions that really impress the client. A successful technology is technology where the client doesn't even see it or know it's there, it's invisible, and they just say, wow, I just love doing business with the Bank of Montreal. And those are the types of things that really matter. And I think a lot of time spent in those areas is gonna move the needle.
Sami, how about you? Number one recommendation for AI and wealth management?
I think we're
not recommendations.
Yeah, so I think we're seeing this huge shift towards hybrid advice. So you have kind of the private banking model, then you have the self-directed online trading model. Hybrid advice, I think, is an area where we're exploring and many others are exploring. So the role that AI plays in that kind of digital transformation, identifying those clients who don't necessarily need a dedicated full-time advisor, and paying the associated fees and costs with that. How do we identify those that can shift towards lower cost to serve models? However, we still don't compromise on the client experience or kind of the financial future, and being able to kind of predict who those clients are, perform behavioral segmentation to identify them, and then be able to, once they shift to that other lower cost to serve model, introducing other types of digital technologies to kind of proactively reach out to them and maintain that level of kind of continuity and contact that a human would have. And maybe now they have access to a pool of advisors versus a dedicated advisor. So it's a bit of a kind of win-win. I think AI has a big role to play in that. Something that we're looking
All right, two more quick questions. Number one threat or risk of AI, and there's been a lot of questions about data and privacy. We talked a little bit about governments, but Sami, number one risk of implementing AI projects poorly or things that can go badly for you in an implementation of an AI solution?
We've had some great roundtable debates on this, especially with our legal team in that Trustworthy AI circle. So there's all these there's all these examples that we can learn from in terms of past failures around tools. Had a resume screening tool that they introduced where they're discriminating against certain people of color. Microsoft had released an unsupervised chatbot, I believe it was on Twitter, that became like sexist, racist, biased in so many wrong ways in a matter of hours, as it was learning through interactions of people that went trolls who were kind of interacting with it. So that becomes a bit of our fear in terms of like how as we become more and more unsupervised in the learning process of AI, how unsupervised is acceptable? Like how much human in the loop do you need to maintain control and avoid adverse effects of kind of AI going wrong? So that's where kind of the governance and the model validation, even kind of monitoring AI once it's in production live in the environment and learning from it and tuning it continues to be an important role we need to play, not just kind of creating and kind of launching it and, you know, letting it loose.
Matthew, how about you? Risk, threat, concern?
Oh yeah, like anything, I think AI is just the exponential increase of technology, and so a lot of the fears and concerns we had before just become a bit more serious, because to me, the one I think of goes back to simple one: hacking. Hacking has always been an issue, but if you have a lot of powerful models you're running on, and someone's able to somehow tweak or change anything, this could go for anything, but the implications become that much more. When we talk about some of the other crazy technologies you were alluding to there, the concept of being able to hack that becomes extremely, extremely scary. And because what happens is we're seeing these things happen already today, even though we're not aware. Our mind, our thinking, our likes, our tastes, and all these things are already being hacked into some degree via a lot of the different social media outlets that we're giving all of our attention to, anything we're giving our attention to. And there are expert marketers and people who understand psychology combined with data scientists. They're forming our likes and tastes to some degree, but what is protecting us is the transmission of that data via these inefficient things we have right now, which are our iPhones. But as we improve those technologies, so do the ability for us to start to be influenced in ways that we aren't necessarily aware of. And this has always been around. This is the age of marketing, but we just have to make sure we're being very thoughtful about any technology. And that's what Sami just spent a lot of time doing with ethical and trustworthy AIs. These problems have always been around, but with technology that will be a bit more invasive potentially, we have to think long and hard about those implications, and are we truly ready for that?
Great. Last question, and this speaks to decision-making priorities, sort of how you take these ideas forward. If I presented to you 4 options: revenue generation, expense savings, risk management, or client sat, what is most appealing right now to the boards, the management teams, the executives about AI? Is it any one of those specifically? Sami?
You know what, it's always a balanced scorecard that we're measured on, so it's tough to point to one, but I would start with, if you lead with the customer in mind and kind of customer client satisfaction, kind of NPS, I think that kind of helps drive, okay, how do we make more revenue with those clients? How do we reduce costs to serve them better in a more responsive way? How do we interact with them and serve them through kind of a risk-based approach? I think, you know, I put my money on kind of customer.
All right, Matt, Sami made it very hard for you to answer this question because he said it's everything.
I echo that the customer is at the front of everything that we think about, and how do we do that better it's possible for everyone to win, because revenue is hard. It's always going to be a harder needle to push. So if you say, well, what is the lowest hanging fruit? It's generally in cost efficiencies and savings, if you want to start somewhere simple. But when you do that, the indirect benefit is you've already built a system that's more robust, it's faster, it's more reliable. The customer's getting a better experience. That turns into revenue. And so I think that is going back to the start simple process, and leave the prediction and futuristic things to, you know, the Renaissance technologies and some of those funds in the world. Believe me, they're doing that, but there's lower hanging fruit out there.
Good. Listen, Matthew, Sami, I want to thank you both for sharing your insights today, giving us some different perspectives, frankly, from inside the Bank of Montreal. I appreciate you being able to sort of scale your feedback and comments down to some of the mid-sized boutique members that were on the phone and answer questions for us today. Susan and the IIAC, I want to thank you for hosting. And if you have more interest in topics like this, please reach out to the IIAC and the FinTech Subcommittee. We're very active with monthly meetings of different topics. With that, I will say we will close the session and appreciate everybody's involvement today. Thank you very much.
Thank you.
Thank you, Scott. Everyone.
Bye.